the role of the regulators and the way they're positioning it, it does drive us into that mode of saying, how do we survive this crisis, and certainly pushes us to be extremely internally focused in our strategy. But I think that, while that's happening, the simultaneous, situation is that a lot of what we're doing is not driven by what we think we ought to be doing or not be doing. A lot of it is driven by the market. And everybody is, yes, today very focused on the short term, they're focused on the economy, and it looks very distracting. But as I said before, I still believe that the larger issues of the market will drive the next wave of innovation. I mean, it will not be accomplished by sitting and determining how, as an independent organization, we're going to sort of get over this hump. And every day you open the papers and you see a wave of, a whole swathe of information that pushes us to react, and we have to react as an industry. That's my personal view. I mean, we will make all the little tweaks, and like I said in my presentation, we will have challenges around expenses. And they will be different. We will have challenges around revenue. They will be different. We'll have challenges around risk. They will be different. But in the grander scheme of things, industry risk, and perhaps I should turn this over to Steinar, who had less of the conversation than we did. But I think that's going to be the interesting part. And I pass this over to Steinar because, the risks that are inherent in the system, recognizing them, managing them, monitoring them, is going to be an industry issue, not an independent, kind of individual bank issue. But Steinar, I think, if I can pass that over to you.
No, I fully agree with that, Subin. I think the I don't think you can hear me, can you? I think the challenges we have is obviously that we have gone through a period now with a substantial focus on the way we have marked and priced the assets which are on the balance sheet. So I think as we go into new territories, I think the challenge is going to be to kind of take the learning experience from what we have seen over the last couple of years, and then apply new methods as to how we value and how we price transactions going forward.
Yeah, just to chime in there, I think in addition to what Subin just said, the market will drive some of these alliances and the priority and pace of those alliances, but Mike, what will also drive them are obviously the underlying payment, trade, and investment flows. So if we see those coming off, probably some strategic decisions might get postponed. But if the wheels are well oiled through some of the measures I mentioned when I spoke, I think you can see alliance arrangements coming back onto the radar, moving up the priority agenda is my view.
Thank you, Neil. We've probably got time for one more question. Anyone from the floor? There's one back there. I'm sorry, at the back.
The risk and rewards doesn't go together, at least in some part of Asia. I think the pricing in Asia, the asset pricing in Asia is mostly based on relationship risk. So I don't know how truly we can factor. We talk about various formulas, but we keep conceding that when it comes to actually whether it's pressure on business. How do you factor some of these experiences into the risk pricing aspect?
I assume that was the best speech, so very hard to say. I'll have a crack at my colleagues here. But I think first of all, it is very important to factor in the overall relationship into the discussion when you onboard risk, a new risk, or when you decide to use balance sheet for a specific client. I don't think it makes sense to be product focused and just look at the merits of one specific transaction when you see, because it is a very complex market we are in, and we understand that, you know, different products have different prices. I think the only way to encounter that is that you look into the holistic relationship you have with a client, and then make decisions based on what the client's needs are on the one side, and whatever hurdle rates you have internally are based on the overall relationship.
The only comment I'd make there is probably making it a little bit more granular and product specific and talking about trends. Not too long ago, just about 2 years ago, you probably had the situation where there was too much money and too many credit lines chasing the few limited, let's say, LC confirmation opportunities that existed. 18 months and into today, you see there's been a sea change where there's clearly an excess demand for LC confirmation off the back of relatively nervous exporters wanting to hedge their counterparty risk. And obviously you've still got banks either trying to deleverage their balance sheets or having concerns on bank and country risk. So I think there's been a 180-degree turn with regard to certainly LC confirmation risk pricing in our market.
Well, you know, I understand Anish's conundrum, because we've spent years and years pricing at relationship levels, price levels, as opposed to market. And Anish, you know, I personally think that that model has already changed into Neil's point. It's partly a demand-supply situation. But I think we've all become fairly practical about it. You have to be in this time pragmatic about it, and you will end up in situations where you cannot price that relationship, and you will have to live with that, and the client will have to live with that. And you know, we have to move to a pricing model, like you say, and like Steinar says, that is driven by if not a formula, but by a reasonable standard of understanding the risk and pricing it. I think in the transaction banking business, particularly in the FI space, I think pricing has been more driven by the client, which is why we call it relationship pricing. Oh, I have to quote 35 basis points. Why? Because the client says that's what he wants. And it has never mattered. Right now, because what Neil's saying, there's a basic supply and demand situation. There is a pressure on the balance sheet that we're now moving to a much more practical, pragmatic approach to it. What the formula is going to be, I think that's probably something that, like Steinar says, is going to be pretty much internal. What standards you want to employ, the mix of your business, the use of your balance sheet in various markets. And those are things that are going to determine pricing. But it's certainly not going to be relationship in the old sense. My good friend has been doing business with me for 10 years. I think that cuts it anymore.
Thank you very much indeed. And that is, I think, a very good note to finish on, actually, is a striking point. There has been a fairly significant, in fact, dramatic change in the way things are looked at, and it's probably likely to go on now for the foreseeable future. However, the other thing that strikes me, especially coming from the Western Hemisphere, is you don't hear the same feeling of doom and gloom listening to this last 45 minutes that we've had. Of course, things have changed, but you just don't pick up the same echoes. It's much more difficult in the Western Hemisphere at the moment to have the same conversation without some of the tension and tremors of what happened 18 months